Users of accounting information and their needs. The users of the accounting information are categorized into two categories. Number one, the internal user, and number two, the external user. The internal users consist of owners and management. Now, number one, owners. Owners are those persons who have contributed their money in the business, that is called the capital, and they are responsible to bear all the related risk of business. So they want to know about the profitability and the solvency of the business, that is the financial position of the business. In case of small business organizations, the owner himself can manage and control all the affairs of the business. But in case of large business houses, different specialized persons, different managers and different other persons are required to manage and control the affairs of the business. Second, managers or management. The second internal user of accounting information is the management or the managers. Management of a business organization consists of the board of directors, managers and other staff of officer grade. They require accounting information in regard to sales, profitability and solvency of the business enterprise for the purpose of planning for the future and controlling the affairs of the business enterprise. They have to take certain decisions regarding different activities for the present and for the future, and this can only be done if proper accounting information are provided to them, and that information is regarding the profit earning capacity of the business in the past, in present, and then they will plan for the future. Then the second category of the users of accounting information are the external users. These users of accounting information have limited authority, ability and means to assess the required information, because whatever has been prepared, whatever accounting information, whatever books of accounts have been prepared by the firm, by the accountants of the firm, they will be ultimately summarized, analyzed, interpreted, and then whatever results have been obtained, those results will be communicated to them. And we have already learnt about the limitations of accounting. So whatever information they get by help of financial statements, annual reports, auditors' reports, directors' reports, etc., they have to rely on that. The external users of accounting information are number one, investors and potential investors. Investors are the persons who have already invested in the business organization. They want to know about the earning capacity of the organization, of the business organization, the company, and its future prospects, so that they may come to know that are their funds, are their investments safe, and will they be able to get the returns in form of dividend on time and the appropriate amount that they want. The potential investors are those who are willing to invest their money in profitable ventures. Making investment by them involves risk, as they have no control on the preparation of the accounting records of the firm, but they have to rely on them. They want to know whether the firm has good profitability and financial position, so that if they are going to invest, will they be able to get the specified returns on their investment that they are going to make in the company. Then the second one are lenders and financial institutions, the banks and the financial institutions and companies are interested in knowing short-term and long-term financial position of business enterprises before lending money to them. To ascertain the short-term and long-term solvency, that is ability to repay the debts by the company along with interest obligations, they will check the present and the past year trends of profitability and financial position, and then they will decide whether to lend the money or not. Then the suppliers and creditors. The suppliers and trade creditors are interested in the financial strength of the business enterprise so that they can increase their trade relations with it. If the financial strength of the business enterprise is strong, they will supply more goods to the business organization because they are satisfied that their money is safe. They will get the worth of the goods that they have given to the firm on credit on time. Then the customers or debtors. On the basis of accounting information, customers can know the continuance of the business organization, how long the business organization is going to continue. They will come to know about it, and in this way they will render their services. Then fifth is the employees. The employees of the business organization are interested in the accounting information to assess the ability of the entity to pay higher and regular wages and other payments such as bonus, regularity in depositing amount of provident fund of workers, and so on. Then the competitors. To know the strength and weaknesses of their competitors, and for strategic purposes, business enterprises examine and analyze the financial statements of other enterprises, and in accordance to that, they plan their or formulate their credit policies, debt collecting procedures, so that they may compete, they may give a good, healthy competition to their competitors. Next, government and other regulators. On the basis of financial statements, government authorities determine the progress of various industries and the need for financial help. The whatever economic policies such as the industrial policy, the fiscal policy, and other such type of policies are made on the basis of the financial information that has been obtained from different industrial enterprises. Then taxation authorities. Various taxes such as income tax, excise duty, property tax, octroi, GST, etc. are levied by the government after analyzing the financial statements. Income tax department, sales tax department, customs and excise departments, etc. They analyze the financial statements of the business enterprises, and then they levy the tax liability. They calculate the tax liability and levies the tax on the business enterprise. Public or society. Public is interested in knowing the growth potential of business entity. Only prosperous entity will provide job employment opportunities to the public. Public also uses the products manufactured by the firm. Financial accounting provides such information to the public. Public is also interested in knowing about the corporate social responsibilities that the business organizations are discharging properly or not. All this information is derived from the accounting information. Then the researchers. The researchers require accounting information for their research work to make inter-firm and intra-firm comparisons of same firm. with the past to know the operating performance and financial soundness of the business entity.